Hello traders and welcome into my trading journal. I'm studying ICT framework on the crypto market and you are watching my fifth recorded session. So we are on an hourly chart on BTC and we have this quite a big range between buy side liquidity at the top here and sell side liquidity below this low. Now so far we moved higher up in the past few weeks, and now we have broken market structure once we moved below this and this low. Now it puts us basically in the discount territory of the range, like deep discount in the range between this low and this high. But also if we are looking at other ranges from lower highs, lower lows, then we are also already in the discount territory. So I would anticipate some sort of retracement higher up before continuation down. So something like this overall. If we are going deeper into the analysis, then what we have above us is a daily gap. We have a 4-hour order block above us here. And we also have this line of the weekly gap. This previous week and the current week, we are creating a gap which we might close before moving lower. Now in the past 4 days, once we moved lower, we practically moved sideways, building liquidity. Now the shorts were already partially taken out on this candle. Anybody who shorted in this area got taken out. But longs were still not taken out. We have equal lows here, we have equal lows here. They were still not taken out. So what I'm expecting is before we move higher, I would expect a sweep lower to take out all these lows and the low below this sell side liquidity, and then moving higher up. Now what else do we have below us is an order block here. Unmitigated order block in this area. So if we are being a bit more precise before we are moving up and down, I would expect move down, change of market structure, then move up, either up until this weekly gap closing, or maybe even higher to mitigate the order block before a move lower down. So what I'm preparing for is a long position from this unmitigated order block in case we are going lower, and then a short position either from this 4-hour order block, or alternatively I will look for a market structure change in case we are arriving here to a daily to a weekly gap closure. And if we are doing something like this, change of market structure here, then this will be my short position. Targeting lower. Now for this long, the take profit levels will be first these highs, or basically the last highs before we are breaking down. Next take profit will be outside of this current range high. The next one will be definitely at a daily gap. And if we are continuing to run, then this will be the fourth take profit level. But practically once we are leaving the range, moving higher, I will move my stop loss higher up somewhere here. Now for the short, it will depend where the short will start, but basically the first take profit will be upon breaking the market structure. Then upon entering this range, this old range, if we are breaking lower, then next to these lows, and if we are breaking even lower, then next to these lows. Now, one additional point of information that I'm using to create this Bitcoin plan is the SNP Index. On the SNP, we moved high, we've broken the market structure, and we already mitigated these two order blocks. We still did not take out the sell side liquidity below these lows. But we already created here a change in market structure. Created a low, a local high, broken the low, broken the high. This is my favorite formation. So I would expect now price to get back into this gap, and if we do not break below this low but continue higher, then I would expect Bitcoin to practically follow the same trajectory. First down, only on Bitcoin chart at the same time we're gonna break below the current lows, and then S&P continues higher for a retracement, maybe somewhere until half of the range between the swing high and swing low, somewhere in the middle, before it continues either lower or keeps ranging here. So I'm using S&P as a proxy for Bitcoin movement, since they are, well, pretty much correlated. So this is my plan for the next few days. I'm gonna place alerts. And once again, I will jump into recording once we are reaching one of these levels, or if I find another setup on lower time frames in the meantime. Okay, let's see how this week goes. We have a first trade setup as part of my overall plan of the price reaching the highs here, going down, changing market structure, going up, going down again. Right now we are reaching range high where I want to take a short position. Now I'm already starting to recognize a reversal pattern here, and on 1 minute chart we are having this gap where I want to take a short and to bring it down to the range low or perhaps even below. So this is my trade entry. Now to summarize this first trade setup, in hindsight it looks like it was obviously a wrong trade entry. Now let's break it down point by point. So this is the area where I started to consider entering the trade, and my entry was here, and my targets were here and here. Now what happened here? We came up, we formed a high, came down, we formed a low, came up, formed a higher high, at which point half of the equation is complete. This high was broken, but here below this low was still not taken out. So entering here was invalid unless we came back down, broken this formed low, and then returned higher here. This would be the correct entry if we would be breaking this low, but we didn't. We only broke the high, returned and formed higher low and higher low. Point number 2. When we zoom out a bit, we can see that this high, which was taking out the liquidity above this one, was really short here, which basically is forming a relative equal highs here and here, which are usually places of liquidity rates. So everyone who was shorting from this area here were placing their stops here and here and here and here. So all of this is what? It's liquidity. And of course, this liquidity was grabbed above these highs, also above these highs and these highs, and slightly here above these ones. So in retrospect, of course, if I even entered here, I shouldn't place my stop loss above here. It was kind of obvious in retrospect. And point number 3 about the correct market structure shift or market structure break, which did happen later on in this distribution range. So let's observe it. Later on, once we grabbed the liquidity above, now this was the first signal that from here on I can look for entries. Why? Because the liquidity was already grabbed. So there was a real reason for the market to reverse course and to continue lower, to either keep ranging or grabbing the liquidity from the range lows. But what happened here? We came down, we formed low. We came up, we formed high, then higher low, then higher high, breaking this high. Then we established a lower low, breaking this low. So now this structure of breaking the high and breaking the low is complete, and I should wait for entries in this area when this high is taken and this low is taken. If there is a fair value gap or an unmitigated order block, then this is where I should be entering the shorts. And next possibility is that once we establish this lower high, lower high, and broken down, breaking this low, now the downtrend movement is already initiated. We have high, low, lower high, lower low, and now we can look for another entry at the lower high. Also looking for fair value gaps here or unmitigated order blocks on a lower time frame. So this was the correct market structure shift where I should have been waiting, for which I should have been waiting and entering trades here. But apparently I was impatient to enter a trade and I became a liquidity for the sharks. Okay, so that's the summary of my first trade setup. Let's see how this week progresses. Now let's summarize this second trade setup. So as I was expecting, the price came down to take out these local lows, and this old low, marked as sell-side liquidity with a dotted line. Below it we had an untapped order block. So on the 5-minute chart we tapped exactly there. Here we tapped exactly to the point of control of the order block and bounced from here. Well, apparently I got excited and I entered a long position on this candle, which was mitigating the fair value gap somewhere here on a 1-minute chart. But the problem is that I didn't really follow the instructions of the model trade entry. For the model trade entry, the price should breach some important low, like this one. So this condition was satisfied. We breached some important low, but then the price should return and to take out a local high established here, showing the shift in market structure. And only then, when the price returns to close some fair value gap here, we should enter a trade. But this condition was not satisfied. Nothing like this happened. We had a local high, which was not taken. We have another local high, which was not taken in any significant manner. It was taken by really little, but that's not enough. The move should be energetic. This move should be energetic. Here, this move was energetic, but it still didn't take out any significant high here. And not any of the next highs were really taking the previously established high. None of them. So, since this condition was not satisfied, there was no trade setup here. There was no long trade setup. In any of these lows, the long is invalid just because we didn't change the market structure from bearish to bullish. It just continuously low, high, lower low, lower high, lower high, lower high, lower high, and then break even lower. So this is point number one. Point number two, I also did not check any confluence with stock market. Let's turn it on. So the stock market basically moved absolutely in tandem with Bitcoin. It moved down and Bitcoin moved down, and stock market continued to go down lower, just as Bitcoin did. So there was no shift in market structure in the stock market to indicate any sort of trend reversal also in Bitcoin chart. So now this is not something that I'm always relying on, but still it can provide additional confluence when I'm looking to enter a trade. So no change in market structure here, and no change in market structure here. I guess I was just impatient to enter a trade just for the sake of entering a trade. And of course it was a losing trade. For the summary of this whole 5th session. So I guess that the only thing that I did right here was to identify approximate areas where I should expect any sort of reaction. So here on my first trade setup, basically it was range high, where prices are often reversing. So yeah, it was prudent to look for shorts in this area. On my second setup here, yeah, indeed the price dropped into this area and spent here a few hours at least. Yeah, the second condition was not satisfied. Not here, and also not here on my first trade, but at least the areas where I was expecting to see a reaction and potentially take the trades were identified correctly. So I'll summarize it as identified potential trade setups, and the emphasis is on the potential. Once the price arrives there, I can look for a proper reaction, change of market structure before entering the trade. Now, what did I do wrong? Well, first of all, apparently I did not identify correctly the higher time frame moves. I was expecting the price to go higher here, to either close this gap to half or revisiting this order block, which did not happen. I was expecting these lows to be taken and then the price to revert, which also did not happen. So my higher time frame expectation was incorrect. No, it's not a huge mistake on its own. We all will make some mistakes when trying to predict some sort of moves. But nevertheless, it's something that I did wrong, as opposed to previous sessions where my higher time frame moves, expectations of the moves were very much correct. Now the second thing is obviously I simply did not follow the very basic instructions of waiting for a market structure shift on each trade setup. It should be easy, right? But apparently it's not that easy when old habits are still affecting me, and when my eagerness to be in a trade or eagerness to try to make money is overpowering the reason and simple fucking instructions. If there is no market structure shift, there is no trade. Very simple. Well, apparently I did not follow that. Did not follow simple trade entry instructions. So what did I learn? After watching ICT videos for a few weeks now, clearly seeing the same pattern being explained and presented with examples and with graphics, I still am rather moved by my old habits and my old emotional response to the price action. If the price is low, I want to enter a long just because it's low. Or if the price is high, I want to enter a short just because it's high. And apparently what I'm learning about myself is that I am still overpowered by my own old habits and old emotional moves. I'm still overpowered by my old habits and emotional reactions to the price action. I would say as well that the urge to try and make money is absolutely detrimental to the progress of a trader. It's not that we do not learn to trade to make money. We do. But the urge itself to make money is not helpful in making correct trading decisions and correctly analyzing the price action in order to execute. The urge to make money is rather detrimental to the progress of a trader. It's amazing to study not only the pattern identification but also this psychological and habitual part of trading, where doesn't matter how well I know the patterns, if I am still acting upon some other driver within me, then this particular part in me, this particular part of trading, this psychology, this discipline, this ability to establish new, better habits has to be studied in depth and more thoroughly, and should be given more attention. Well, perhaps even more than to pattern recognition. Okay, see you in the next session. Thank you for watching, and goodbye.